let's go to a weekly chart on the S&P and look at why am I still shorting? Why can't I go long? Well, the reason is because of this chart. Okay, this is the chart. I need to see a breakout on the other side of this trend line. Until I see that, I'm short biased. I just am. That's my trading strategy. And this could easily have, and it was until today, essentially emming out, and it still could if this pulls back here. Okay, that's the whole thing. And as far as I'm concerned, nothing's really changed. Yeah, we got a 7.7% CPI print, but in my opinion, all that says is it tells the Fed, okay, you can continue full steam ahead raising interest rates. Go for 100 to get inflation down, because really we're not that much further down. 7.7% is still a big problem. I don't see how this massively improves the situation such that we should get a 4.5% rally in one day. And if you look at the move, I mean, let's go to like a 5-minute chart here. What happened? The majority of the move was in 5 minutes. It went from 3.7. We moved over 100 points in 5 minutes, and the rest of it's just been a slow grind up and creating negative divergence the entire time. This is look at this divergence here on the 5-minute chart. Right, this is a classic case of complete divergence. It's totally opposite. Bearish divergence forming on a 5-minute chart, but no crazy breakdown yet. We'll get into that. Let me work my way down. I just wanted to show you that really quickly, like why am I? A lot of people are turning bullish. Well, this is why I'm still bearish, because the weekly chart looked like crap. So let's go to some lower time frames. Let's go to the daily and let's see how I came up with this wave setup. What did I do? And where do I think we're going from here? Huge amount of shorts were probably stopped out. And that's why we're stopping here. However, it does invalidate my original wave count, right? So this went above the start of my wave count. So that invalidates the whole thing. So I should delete this, but I want to go through why I came up with this. We had a breakdown here. I knew that we would get a retest. I assumed it would be around the top, around this area. A common retest would be around 50%, 61.8 area, which is exactly what we got. If we go a little bit lower time frame, you can see where did the 2 go to on the fibs. Why did I do this? Let's reverse it. Yeah, so 61.8 zone. Okay, we had 61.8. A bit more than 61.8. Actually, I went like this. I did like this. 61.8, 78.6. This area was where I expected a reversal, which is commonly, you get a move up and then you can short it on the beginning of a wave. And then you should get the wave C, which is always wave C, wave 3. Wave 3 is always the biggest wave of an Elliott wave series. And that pointed to, the logical target was a 1 point. So you would measure this move, this one move. Reverse it again. It goes either 1.618 or 2.618. 2.618 made sense as a downside target. Right here at the bottom of our huge channel that has existed since the beginning of this crash. I'm gonna make this big. See this big parallel channel. Okay, I know it's hard to see like the nuances, but you can see the bottom of this parallel channel is down here, 3,300. And it also aligns with major support down here. This is our big support zone going all the way back to 2020. It was an extremely logical point, maybe too logical. Maybe that's why we had to rally today. It was too logical and too many people were short. They had to wash out the shorts. So this invalidated my wave count. I'm not sure what happens now, because if we close up here, it's actually a W, right? We essentially confirm a W. So I'm going to delete this wave count because it's been, unless we do a full retrace, it is invalidated. I think even if we do a full retrace, it doesn't even matter. You can see we played in this area. This was a midpoint channel area, the parallel channel. You can see on the daily, we also played at the midpoint of the VIP line. This is a risky spot to take shorts or longs. You can even see here, we never got a full breakdown. Like this could have went either way from yesterday's move. It looked like a breakdown, and all it had to do was break down a little bit more, and there's your confirmation. But instead, it's almost like a fake out. the upside. But if you look at this, take this, we didn't break out to the upside either on RSI. So we're essentially in this like squeezing pattern. We're just squeezing here, and we're going to move one direction or the other. There is a divergence here forming. So we made a higher high slightly here, but RSI made a lower low. So divergence between these 2 points could create an M. But at the same time, you know, we go like a 4 hour, right? This would be considered like a confirmed W up here, right? You push through here. Now there's your W. And we would say, okay, let's say chaos. And we hit the 1.618. Hence why we paused. And where's our upside target? Chaos would point to 4,262. That's the chaos level. 2.618 is at the midpoint of this other previous channel that I drew. And then we've got 3.59 at the top of this downward parallel channel. It's looking bullish, but it could also reverse. We've got a 9 on the 1 hour. We've hit this 1.618. That's a big resistance level. It could easily pull back at least to 38.60, and then we can move higher. If you wanted to short up here, it's not a terrible spot. Like if you go to a 15-minute, right? We've got divergence, big divergence, 7s, 8, 9s, 9 on the 1 hour. It's a nice spot to short in the short term. What I do know is that a pullback here makes sense, at least going into Friday. Because if we look at the options data, and I posted about this in Rocket Chat, if you look at the options data, max pain is around 380. So on the S&P, SPY, it's 380. So where are we on the SPY? If I switch to SPY, yeah, so SPY is at 390. They want to bring it down to 380, this area, 380 to 375, to destroy all of the option holders. Absolutely just like wreck them. That could happen. That has a decent chance of happening going into tomorrow.